Welcome back to the deep dive. Today, we're cracking open a concept that really isn't just another tech trend. Researchers are calling this a structural inflection point of, well, historical magnitude in the AI sector. For the last decade, AI progress felt predictable, almost mechanical. But now it feels like we're standing at the edge of a cliff where the fundamental rules have just changed.
Completely.
And this change has these profound long-term financial consequences for the three giants who really dominate this landscape, NVIDIA, Google, and of course Apple.
Right.
So our mission today is a serious one. We're going to try and synthesize the highest level technical research, the stuff coming directly from the architects of modern AI.
And pair that with the hardcore executive commentary, the financial modeling.
Exactly. We're trying to give you a detailed roadmap for navigating this next era of computing because, well, the old assumptions about how AI grows just don't hold up anymore.
And that roadmap, it really begins with a declaration from the very front lines of AGI research. It's articulated most clearly by Ilya Sutskever, the co-founder of OpenAI. He says the age of scaling is definitively yielding to the age of research, or, as some call it, the age of discovery.
Okay, let's define that for everyone right away. What exactly was the age of scaling?
The age of scaling was an era of brute force. It was all about reliably getting better performance just by throwing, exponentially more computation and vast amounts of data at the problem.
So what is that?
It is an extremely successful paradigm. It gave us the foundational models we have today, but we've hit a ceiling. That era where just being bigger was the main measure of progress it's over. Now we're in a phase where ingenuity, new algorithms, and just fundamentally different architectural approaches are needed to move the needle.
And that is the crucial pivot, because the old market anxiety, the one that still fuels a lot of that AI bubble talk, it rested on this idea that if AI research slowed down or if model training plateaued,
then compute demand would eventually slow down with it.
Right, leading to a hardware collapse.
Precisamente. And that thinking seems to be completely backwards now that we understand the physics of this new age of research. The pivot to these reasoning-heavy models, which people call them System 2 thinking, which we'll get into, it doesn't signal less demand at all.
Quite the opposite.
It signals radically different and maybe most critically, continuous demand.
This is where we have to introduce a key economic concept from our sources. This shift catalyzes a Jevons paradox in compute consumption.
Yeah, the Jevons paradox, for anyone who's not familiar, it originally referred to the phenomenon where technological efficiency gains actually increase the total consumption of resource.
Instead of decreasing it.
Exactly, because the resource becomes cheaper and more valuable to use. The classic example is making steam engines more fuel efficient. Instead of reducing coal use, people just found more valuable things to do with steam engines, and the total demand for coal exploded.
And in AI, the paradox is it's identical. As the models get more capable, more efficient at reasoning, meaning they can do more valuable tasks, the demand for the underlying compute just skyrockets.
Exactly. We're willing to pay significantly more for a query that solves a complex, high-value business problem than we ever were for a simple search query. It's a structural demand driver.
So the value proposition changes from simple retrieval
to sophisticated agency. It moves the industry from these episodic, massive training runs, which you can think of as building a huge skyscraper, to continuous, heavy-duty inference, which is like the perpetual high-load utility company that's powering an entire city 24/7.
And that fundamental shift completely alters the investment thesis for our three core companies. NVIDIA, who supplies the power. Google, who's struggling to host and use it within their old economic model.
And Apple, because they control that last mile of intelligence brought on the user's device.
Let's start by really unpacking the technical reality that defined the last decade. It was all governed by the scaling laws. If you were an AI practitioner in the 2010s, this formula was basically your Bible.
The formula was, like I said, just incredibly elegant in its simplicity. It made AI progress feel almost manufactured. Performance gains, you'd measure them by things like reducing predictive error or cross-entropy loss. They were a predictable power law function.
You just plotted it on a graph.
You did. You plotted performance based on three inputs: the model's parameter count, so its size, the data set size, the quality and quantity of text, and the compute budget you allocated, the energy and time spent.
So if you needed a 10% gain in performance, you knew roughly that you had to crank up one of those variables by a factor of X. It took the R&D risk way down.
Absolutely. And this predictability gave rise to what Rich Sutton famously called the bitter lesson.
I find the bitter lesson just a fascinating concept. It really encapsulates the entire ethos of that era.
It was this humbling realization that just leveraging computation and massive data reliably and consistently outperformed any clever human-designed heuristics or complex hand-coded algorithms.
All that careful engineering.
Right. Researchers spent years trying to engineer AI with explicit logical rules. But when the big transformer models came along, their simple goal of just predicting the next token, backed by all that data, it just crushed those engineered systems. You didn't need a smarter algorithm. You just needed a bigger checkbook, more time, and, critically, access to the entire human corpus of knowledge. It turned AI R&D into a reliable manufacturing process.
But every manufacturing process needs a reliable raw material. And this is where we hit the hard bottleneck, the thing that ends the age of scaling, the data wall.
The data wall is the exhaustion of the core input, high-quality, human-generated text. Sutskever explicitly calls this the fossil fuel of AI. The original training corpus included everything unique: the public internet, GitHub, academic papers, Wikipedia, all the digitized books. The sheer scale of that effort means we have effectively tokenized the entire unique, non-repetitive corpus of human knowledge in about a decade.
That is genuinely a staggering thing to realize when you stop and think about it. We burn through hundreds of millions of years of accumulated human thought, all the unique stories, code, arguments, history, in 10 years.
And now what?
Exactly, now what?
And now we're seeing the brutal reality of diminishing returns. Simple scaling is hitting a wall, not because models physically can't get bigger. We can build models with trillions of parameters. It's because the unique signal in the training data is exhausted. If you keep training on the same pool of data, you just get overfitting, not deeper intelligence.
Yeah.
The model starts memorizing the noise, including all the biases and errors, instead of learning new generalizable concepts.
And this introduces the structural, long-term problem that's going to plague future training runs, the slop feedback loop.
Exactly. This is an insidious form of data degradation. As these AIs we've just trained start to proliferate across the internet, writing articles, generating product descriptions,
Filling up forums.
the data available for training the next generation becomes increasingly filled with content that was actually generated by the previous AIs. This is the slop, as researchers call it.
So the data just becomes homogenized, synthesized.
Precisely. If you train the next generation on the last generation's output, you're basically feeding the model a diet of recycled, statistically homogeneous, and increasingly bland information. It dilutes the novelty and the true human ingenuity that was in the original corpus. This is now a massive, expensive engineering problem. The biggest models risk becoming experts at sounding fluent, but in a closed loop, without any real external causality or originality.
And the ultimate manifestation of this plateauing, the structural weakness of the age of scaling, is what researchers are calling the generalization gap.
Right. Despite training on trillions of tokens and unimaginable volume, these state-of-the-art models still have fundamental flaws. They hallucinate, they struggle with novel, logical puzzles, and most importantly, they fail to apply knowledge outside the specific distribution they were trained on. They can't generalize efficiently.
And this is the inefficiency that the age of research has to solve. It's the key bottleneck now. A human can grasp a brand new complex concept from just a few examples. A paragraph in a textbook.
Right.
A large language model, even a state-of-the-art one, still needs billions of tokens to get that same level of robust generalization. And now that data volume is maxed out, this inefficiency, the sheer computational cost of gaining new knowledge, becomes the primary problem.
So if the old recipe is broken, just scaling massive static data sets, we have to fundamentally shift where we look for progress. We transition into the age of research, which is defined by the search for entirely new algorithms or new recipes that move beyond the simple passive task of just predicting the next token in a sequence.
This is the move from sounding like a human to ideally thinking like an expert.
Exactly. It's the necessary shift from System 1 to System 2 thinking. System 1 is fast, intuitive, pattern matching. That's what the last generation of LLMs mastered. Incredible fluency. System 2, though, is slow, deliberative, reasoned. And crucially, it prioritizes verifiable accuracy over speed. The goal is to make the AI perform rational, multi-step deduction, not just fluent, single-step prediction.
To do that, the model has to engage in active search. It can't just rely on its stored weights.
Active search is a requirement for System 2. It means the model has to learn to dynamically explore solution spaces, to verify its own tentative answers internally, and apply logic dynamically, rather than just spitting out the most probable next word. It needs the capacity to hit a dead end in its thought process, backtrack, and try a different line of reasoning. just like a human solving a complex math problem.
And this active multi-step search is the technical engine that's driving the next wave of hardware demand. It brings us to the most critical financial concept in this whole shift: test time compute, or TTC.
Test time compute is the fundamental game changer for the hardware economy. It means allowing the model to spend exponentially more computational resources at the moment of inference, when you ask the question, to improve the quality, accuracy, and depth of the answer.
So you're literally paying the model to take time to think through the problem before it replies.
Precisely.
So instead of just an immediate response, the model is generating all these internal hidden steps that are invisible to the user but are consuming massive amounts of compute.
That's it exactly. The mechanism for this involves techniques like chain of thought prompting or the even more intensive tree of thoughts and search algorithms. Before giving you the final output, the model generates a complex sequence of intermediate reasoning steps. Think of it: a planning phase, a calculation phase, a critique of that calculation, maybe exploring 2 or 3 different internal solutions in parallel. And then finally, selecting and revising the best path before it outputs the final answer. These intermediate latent thought processes consume massive compute, but they are absolutely essential for achieving that System 2 accuracy.
This is where the financial physics of the entire sector changes dramatically. This is the move from linear to exponential growth in compute demand. Let's talk about that economic multiplier of System 2, that infamous 23x spike.
This is the core thesis for why compute demand isn't slowing down, it's intensifying. Let's just walk through the numbers from the sources, comparing a typical interaction today versus a System 2 interaction tomorrow. In the traditional age of scaling inference model, say, asking a simple factual question like, what's the capital of France? The model processes maybe 100 input tokens and generates 50 output tokens. The total computational steps or token passes is around 150.
Okay, 150 passes. That defines the low-cost economics of classic search or a simple chatbot. Cheap, fast, scalable.
Now, consider a high-value, complex reasoning query. The kind of task that actually justifies the high cost of the machine. For instance, asking an agent to draft a comprehensive, multi-stage business strategy for a software launch in 3 different regulatory markets, identify core risks, and provide 3 potential mitigation plans.
That's a huge shift from a simple query.
It is. The model can't just retrieve an answer. It has to generate an answer using logic. So its internal thought process might look something like this: generate an initial strategic plan, that's 500 tokens, critique that plan for legal conflicts, another 500 tokens, explore market option A in depth, that's 1,000 tokens, explore option B, another 1,000 tokens, verify the chosen strategy against financial models, 500 more tokens, and then finally it outputs the concise 50-token executive summary.
Wow. Okay, so if we tally that up, the internal plan, the critiques, the parallel searches, the verification, we're looking at something like 3,550 token passes for just one interaction.
Exactly. The source analysis shows that a single high-value user interaction in the age of research consumes approximately 23 times more compute than the traditional simple model. This is the structural driver for NVIDIA's continuous hardware demand. It's not just more users, it's users asking for exponentially more deep, continuous effort per query. And we'll pay for it because the value it generates is immense.
So if human data is now scarce and expensive, where does the new proprietary, high-quality training material come from to feed these 23x reasoning models? This leads us to synthetic data and self-play.
Right, we're moving from harvesting human data, the fossil fuel, to refining data internally. You could call it synthetic solar power. Self-play, which was famously used by DeepMind in systems like AlphaZero to master chess and Go by, playing against itself, is now being applied to general reasoning. The model acts as both the student and the teacher at the same time.
How does that work in practice for, say, an enterprise language model?
You define 2 critical, perpetually running roles within the compute cluster: the generator and the verifier. The generator attempts to solve a problem, say, writing a massive piece of bug-free code or solving a complex logic puzzle.
And the verifier checks its homework.
Essentially, yes. The verifier then checks the solution's correctness. In domains like math or code, truth is objective. The proof holds up, the code compiles and runs, the logic is sound.
And if the solution is correct, that entire internal multi-step reasoning trace, the attempt, the exploration, the self-critique, that becomes a new proprietary high-quality training example for the next generation of the generator.
Precisely. This is the virtuous cycle of data generation. It converts electricity and silicon into valuable, non-dilutable, intellectual property, high-quality synthetic data. Companies that own massive compute clusters like Google and Microsoft OpenAI are basically running data refineries 24/7. And this creates an unassailable moat because having the best model lets you generate the best data, which lets you train the next best model, and so on.
And you mentioned the verifier. It seems like the need for a highly reliable verifier model hints that we haven't truly overcome the bitter lesson. If you have to spend all this compute building a rule checker, aren't you just building a new, more expensive kind of human-designed heuristic?
That is a really insightful question, and it captures the tension in the age of research right now. The difference is that the verifier isn't necessarily hand-coded with human rules. It's trained using reinforcement learning and self-play to be an objective truth seeker. But yes, the verifier is the algorithmic bottleneck. Sutskever highlights that these proper verifier systems are critical because now the ability to reliably check facts and discriminate between correct and incorrect reasoning is as important as generating the steps in the first place.
So to synthesize this whole technical pivot, the unit of production is no longer the parameter, the size of the model.
It's the reasoning trace.
And that high-value trace costs 23 times more compute.
Before we move into the profound financial implications this all has for NVIDIA, Google, and Apple, if you're finding yourself wrestling with the complexities of this structural inflection point, this shift from scaling to reasoning, you're probably thinking hard about the overall health and temperature of the market. That's why we encourage you to check out tools that can help cut through the noise.
Indeed. We highly recommend you welcome to search and download the iOS app Buffett Indicator from the Apple App Store. It provides daily updates on the critical metric Warren Buffett uses to gauge overall market valuation against GDP.
It's an essential tool for monitoring market frothiness, especially during times of rapid structural change like this.
Right. Whether you're worried about an AI bubble or celebrating this new compute paradigm, keeping track of the total market temperature is just crucial. So search and download the iOS app Buffett Indicator from the Apple App Store. Now that we've established the physics of reasoning, that 23x spike in continuous demand, let's pivot hard to the financial roadmap. This technical shift directly addresses the biggest financial anxiety surrounding NVIDIA.
The AI bubble anxiety.
Exactly. The fear that demand collapses once the initial training clusters are built and amortized.
And the age of research is the definitive counter-narrative. It shifts the entire story from cyclical risk, the lumpy demand of training, to structural, sustained, utility-like demand.
We need to detail that shift from episodic training to continuous reasoning demand, because that is the foundation of NVIDIA's future valuation.
Training demand was lumpy, predictable, but finite. You build a massive H100 cluster for a model, you train for 3 months, you pay the bills, and that revenue disappears until the next model generation. That's project revenue.
Right, it's prone to cycles. But inference demand, the actual usage by billions of people, is constant.
It's utility-like. Every interaction, every query, every agent execution consumes compute. And the shift to test-time compute doesn't just make inference consumption constant, it makes it explode in intensity. Importantly, financial projections consistently show that the aggregated cost of inference over a model's lifetime is now forecast to greatly exceed the initial one-time cost of training it. This solidifies that continuous utility-like demand for NVIDIA's hardware.
Let's revisit the Jevons paradox for NVIDIA here. Why do efficiency gains in chips like doubling the performance with Blackwell not reduce total demand? Why does it actually increase it?
It's purely a function of value. Think about historical parallels. When the efficiency of lighting improved dramatically, moving from oil lamps to electricity, people didn't use less light.
No, they lit up entire cities.
They lit up their homes more brightly. The cost per unit of illumination dropped, but the total consumption of energy for lighting skyrocketed because we found exponentially more valuable uses for it.
So applied to AI, the value of the output has increased exponentially.
Exactly. When AI was just giving you a slightly better search result, the value was marginal. Now with System 2 reasoning, AI can replace or augment specialized, high-cost human labor lawyers, engineers, developers. If a reasoning query costs $1 but saves a user an hour of specialized labor that costs hundreds of dollars, we will pay that dollar thousands of times a day. This massive increase in value justifies the continuous, aggressive infrastructure build-out.
Which means NVIDIA's hardware strategies, specifically the Blackwell architecture, B200, is perfectly aligned with the physics of reasoning. It's not just a speed bump.
Blackwell is not just a general performance increase. It is optimized for the specific demands of reasoning. Let's look at 2 key features, FP4 precision and the NVLink switch.
Okay, starting with FP4 4-bit floating point precision. We've heard about 16-bit for training, but why is 4-bit suddenly so critical for reasoning? Doesn't reducing the bit depth reduce accuracy?
It's a trade-off, and it's specifically tailored for inference. Training needs high precision, like 16-bit, because models need that fine granularity to adjust their weights correctly. However, once the model is trained, you can quantize those weights down to a much lower precision, like 4-bit, without a major loss in output quality.
Why is that?
Because reasoning relies less on those fine-grained weight adjustments and more on rapid data movement and throughput. FP4 allows the chip to handle 4 times the amount of data and calculations per cycle compared to 16-bit. It effectively quadruples the speed of the reasoning engine.
And the second feature, the end-to-link switch, connecting up to 72 GPUs into a unified superchip, why is that so critical for test-time compute?
It's a requirement for sophisticated System 2 thinking. Remember our tree of thoughts example. The model is running parallel searches, exploring multiple branches of logic at once. These branches need to communicate massive amounts of intermediate data, the thought traces, between the different chips. Traditional networking has too much latency. The NVLink acts as the corpus callosum, a high-speed interconnect that lets the AI brain think as one massive, unified entity.
Let's look at the numbers cited in the synthesis, because this paints the whole picture for NVIDIA's transition, the $300 billion data center.
The projection is aggressive, but it's grounded in this structural demand transformation. You can trace the transition clearly. In fiscal year 2024, NVIDIA's data center revenue was $47.5 billion. This was mainly the initial episodic training boom, the big H100 clusters. In FY 2025, that ramps up to an estimated $110 billion. This phase is fueled by the large-scale deployment of those trained models into high-volume inference.
So the immediate surge is still about deployment, not the full reasoning spike just yet.
Correct. The real inflection point, the moment the age of research truly hits the balance sheet, is fiscal year 2026. Estimates suggest revenue of $170 billion to $200 billion as the Blackwell ramp begins, driven specifically by the test-time compute era.
And the long-term forecast.
By FY 2027, with the next architecture, Rubin, likely entering the market, and ubiquitous deployment of System 2 reasoning, we could see data center revenues surging to an estimated $250 to $300 billion annually.
So the conclusion on NVIDIA is clear. They're not facing a demand cliff or a bubble bursting.
No, they are facing a structural demand transformation where their recurring, continuous revenue of inference, now intensified by reasoning, far outstrips the initial episodic revenue of training.
Okay, let's pivot to Google. Because Google is technically, exceptionally well-positioned for the age of research. DeepMind's culture is perfectly aligned with this whole thesis.
It is. But this shift threatens the golden goose, search.
This is the classic innovator's dilemma. The new technology is technically superior, but economically incompatible with the existing, highly profitable business model. And the conflict between cheap retrieval and expensive reasoning is just brutal for Google.
It's a volume versus value problem. Search economics are built on massive volume, 8.5 billion queries a day, and extremely low cost. The cost per query is less than a penny, latency is milliseconds, and monetization through ads is incredibly efficient.
A money printing machine.
The definitional one.
Right.
Reasoning economics flips that entire thing on its head using our 23x multiplier.
Right.
The cost per query jumps from under a penny to maybe $0.2950. Latency moves from milliseconds to seconds or even minutes. And monetization is really difficult because inserting ads into a single, cohesive generated answer is disruptive.
The cost threat is immense.
It is. The sources cite an estimated $36 billion impact on operating income if only 10% of their daily searches shift into that high-cost reasoning mode, like AI overviews. That's a massive, imminent friction point.
Yeah, Google has technical hedges that nobody else has. Their research DNA is maybe their greatest asset.
Their research culture is ideal for this new age. DeepMind has always prioritized fundamental AGI research, finding those new recipes that Sutskever talked about. They're uniquely positioned to solve the algorithmic complexity of System 2 through breakthroughs, not just brute force.
And their multimodal advantage becomes critical now that the text data was drying up.
Correct. If human text was the fossil fuel, Google owns the world's largest untapped oil reserve of video and audio data. YouTube.
Right.
Video is the next frontier for training reasoning models because it intrinsically teaches the model about physics, causality, and time things. Text alone can't teach efficiently. This gives Google a proprietary data moat for the age of research.
And their final critical hedge, their secret weapon against that $36 billion cost threat, is the TPU, the tensor processing unit.
The TPU is their defensive maneuver. Because Google is vertically integrated, designing their own chips, they completely bypass the massive NVIDIA margin. That 75% profit premium NVIDIA charges. This drastically lowers their internal cost for test-time compute.
And the TPUs are technically superior for their specific task, right?
They're custom-built for transformer inference. Reports say they're consistently 15% to 30% more efficient for this reasoning workload than general-purpose GPUs. This efficiency, combined with the margin savings, gives them strategic sovereignty over their own cost curve.
So what's the financial outlook for Google? Best tech, worst financial position.
You have to expect continued elevated capex. They'll keep spending $50 billion plus annually to build out this TPU infrastructure. In the short term, expect margin compression as the cost for search rises. But the long-term play is revenue expansion if they can monetize agency.
Let's elaborate on agency. That's the key to escaping the dilemma, right?
Absolutely. If the model is just providing links, the value is low. If the model can book your flight, schedule your meeting, or write the legal brief, if it acts as a digital agent, the value is far higher than an ad click. They have to shift the user's perspective from free search to paid agent services.
So they have the best map, but they're sailing through the roughest financial waters. Now, Apple has often been seen as late to this party, but the physics of reasoning, especially the high compute requirements of TTC, play perfectly into its core strategy: edge computing and privacy.
The main physical constraint is obvious. You can't run a trillion-parameter model on an iPhone. But the age of research provides the technical escape route through techniques like distillation and quantization.
Explain what that process does for the average user.
Distillation is where a massive, powerful teacher model is used to train a much smaller, resource-efficient student model, say 3 or 7 billion parameters. The goal is to transfer the sophisticated reasoning capabilities of the large model into the tiny model, making it runnable on a phone.
And this relies on a hybrid architecture, which is the cornerstone of Apple Intelligence.
Yes. The approach is brilliant. The on-device model handles personal context and basic reasoning, prioritizing absolute privacy. The complex queries are routed to their secure private cloud compute. However, even the on-device model, when it's doing System 2 reasoning, demands massive sustained memory.
And this brings us to the core driver of the consumer side of the next cycle, the hardware supercycle, where RAM is the new gold.
This is a critical point. To run any reasoning model locally, even a distilled one, you need huge amounts of fast memory for 2 reasons. First, the context window. The model has to hold all your relevant personal data, emails, messages, calendars in active memory. Second, and more critically for test time compute, is the KV cache.
Okay, let's take a moment to explain the KV cache. It's a technical concept, but it's crucial for memory consumption.
The KV cache is basically the model's short-term memory, or its scratchpad. When a model processes a prompt, it generates key and value vectors for every token. When it engages in a complex reasoning chain, like our 3,550 token pass example, it has to store every intermediate thought trace in that cache.
So if the reasoning chain is 23 times longer, the KV cache grows exponentially.
Exactly. For a sophisticated 7B parameter model running a deep System 2 reasoning trace, the cache can quickly consume 8 GB, 10 GB, or even more RAM. Current iPhones with 8 GB of RAM are borderline. They can run a simple model, but they cannot run sophisticated, high-fidelity System 2 agents with acceptable speed.
So to truly run high-fidelity reasoning locally, future iPhones, the iPhone 17 or 18, will need 12 GB or even 16 GB of RAM as a structural necessity.
And that turns RAM capacity into the ultimate obsolescence driver. People used to upgrade for a better camera. Now they will upgrade because their old phone literally cannot think fast enough to run the new generation of agentic apps.
And the neural engine NPU is the primary metric now.
Right. The NPU becomes the main performance metric. Chips like the A17 Pro or M4 are marketed on their NPU capability because that's what determines the speed of on-device reasoning. This drives the shift from dumb apps to agentic apps.
So the final verdict on Apple, how do they monetize this?
Through their traditional strength, hardware margins and premium pricing. They don't need an AI subscription. They just need to make the hardware mandatory for the new experience. And critically, privacy becomes a valuable luxury good. Their promise, what happens on your iPhone stays on your iPhone, is an increasingly valuable defensive moat. They are the defensive growth pick and shovel for the consumer side of this new age.
Let's broaden our lens because this shift has implications far beyond just tech. This explosion in test time compute has massive long-term energy constraints.
It fundamentally converts electricity and silicon into intelligence. And while inference is more efficient per calculation than training, the sheer unrelenting volume of continuous reasoning, that 23x spike, exacerbates the energy veracity of the entire AI ecosystem. We're creating a new industrial demand for power that is growing exponentially.
And the sources frame this as driving huge derivative industries.
Yes. The forecast for infrastructure spend, often cited as $3 trillion over the next decade, is largely driven by power generation and cooling requirements. This means energy infrastructure itself, grid modernization, nuclear power becomes a direct derivative play on this thesis.
And let's address the elephant in the room, the timeline to AGI and what this age of research suggests about its financial meaning.
Sutskever provides a broad timeline, convergence on AGI within 5 to 20 years. The distinction is critical for investors. If it's 5 years away, the market is in a singular frenzy. However, the shift to the age of research suggests that the 20-year timeline is highly plausible because there are still hard scientific problems left to solve.
A 20-year trajectory supports a long, sustained industrial cycle, similar to the build-out of the internet, justifying the continuous capex we're seeing.
Absolutely. It's not an imminent singularity event. It's a decades-long revolution requiring sustained infrastructure investment.
So, final synthesis. What is the new alpha for the investor in the age of research?
The age of scaling was simple. Buy the biggest clusters. The age of research demands architectural nuance. The new alpha lies in understanding the specific requirements for high-latency, high-value thought processes. Who can deliver System 2 thinking most efficiently?
Let's summarize the conclusions for our trinity based on the physics of reasoning.
NVIDIA is facing demand transformation, mitigating their cyclical risk, and setting them up as the sovereign of continuous utility compute. That remains a bullish outlook. Google has the best technical blueprint, but they face immense margin pressure from the cost of reasoning. They have the capability, but the execution risk is high. We're cautiously bullish. They have to solve the innovator's dilemma. And Apple is driving the necessary consumer hardware supercycle. They're leveraging the high memory demands to turn privacy and on-device compute into a luxury commodity. That's a strong defensive growth play.
The core insight Sutskever provided is that the industry has exhausted hundreds of millions of years of accumulated human thought in 1 decade. Now they're building machines that generate their own proprietary knowledge. So the final thought I want to leave you with is this. Given the efficiency of self-play and verifier systems, how quickly will the rate of synthetic data generation accelerate the timeline for entirely new scientific discoveries? Will we look back on the age of scaling as the last time human knowledge was the limiting factor?
It truly changes everything. And that leads to a profound final thought experiment for you to consider. What are the deep ethical and economic implications of the verifier model? If we are successfully building AI systems that are demonstrably better at checking facts and verifying correctness than they are at generating the initial ideas, what new societal structures will that enable? What happens when our ultimate, most reliable source of truth is a synthetic, automated reasoner?
A fascinating question for the next decade of discovery. We hope this deep dive provided you with the clarity you needed to navigate this incredibly complex and incredibly exciting inflection point.
Thank you for joining us for this deep dive into the age of research.